doing this show, and I'm very grateful to everyone who tunes in every week on Tuesday nights. And we also rebroadcast the show on Saturdays at 1 p.m. You can also catch us. We stream on WNRI.com. So if you are out of range of our terrestrial radio or antenna, you can certainly go to WNRI.com anywhere on the planet, and you can listen to WNRI live. A little bit about me. I'm a realtor. I'm licensed in Rhode Island and Massachusetts, and I have a team of realtors across the country and in some cases around the globe to whom I refer business. So if you're looking to buy or sell a home in Portugal, France, Canada, we have real estate partners that we work with and I could refer you to. All you have to do is give me a call, 401-409-5030. That is my office number. You can call or text me at that number. Again, Joe Luca, RE/MAX Preferred, 401-409-5030. I work at RE/MAX Preferred in North Providence. Excuse me, and I've been there about as long as I've been on this radio show. So over a decade. Excuse me, and I love it. Great group of people there, consummate professionals, great broker. We have offices in Cumberland, Smithfield, Pawtucket, North Smithfield, so we've got a pretty dynamic group of agents in the company. So tonight I want to talk about a couple of things. This is, we've been on a real tear here in the real estate market because we've had, excuse me, I've got a frog in my throat. We have had a lot of positive news every week. Okay, I guess the only bad news you could talk about is, if it's bad news, quote unquote, is mortgage interest rates. They have been hovering in between the low sixes to high sixes. These are prime rates when I refer to those rates. I typically go to my trusty Mortgage News Daily to get the most recent mortgage rates for the day. And what we have for today is for 30-year fixed rate 6.81, 30-year FHA 6.19, 30-year VA 6.20. Excuse me. And those are a smidge lower than they were last week, if you remember, but they're still, in that same range. For those of you that don't know, an FHA mortgage is a mortgage that's a low down payment. A 3.5% down payment is all that's required for that. Now, of course, there are certain minimum credit requirements, your FICO score. The same thing with a VA. Now, the VA, that is for veterans. It's for active military and retired military. Veterans. It's a no money down loan, and it's no money out of pocket. So what happens with a veteran's loan is, when a veteran or active military is looking to buy a home, all of the fees, the appraisal, the home inspection, any down payment, earnest money deposit that the buyer submits with the offer, which you have to submit to make it a legally binding offer, those are returned to the borrower, the buyer, at closing from the proceeds of the loan. So what does that mean? I'm a veteran. I qualify for the VA loan. What's great about the VA loan is it's no money down. You don't have to pay PMI, private mortgage insurance, like you do with an FHA loan. And there's no prepayment penalty for any of these loans. And with the VA loan, they have a little more latitude regarding credit history. So you could have a few more dings on your credit and still qualify for that 6.2% on the VA loan, even though your credit isn't as good as it would have to be if you were applying for an FHA loan or, of course, a conventional loan. Okay, so the VA loan offer is negotiated. buyer supplies the deposit, whatever that is, if it's $1,000 or $15,000, and then you have a home inspection. They pay for the home inspection, and then if that goes fine, then there's an appraisal, and that gets paid for. And then when you get to closing, okay, if you're buying a $450,000 house, you put. And then now let's say you're being represented by a buyer's agent, okay, which everyone who's buying a home should have their own agent representing their best interests, because they can negotiate on your behalf, and they would represent you. If you're going to the listing agent or someone on the listing agent's team, they are looking out for the seller. Okay, so you want to have your own representation when you're buying a home. And many times, the sellers are no longer required to pay for the buyer's agent's compensation. So typically what happens is the buyer either has to pay that out of pocket, or it has to be reflected in the offer, ask the seller to contribute towards it, and then the seller would make their own independent decision if they wanted to do that or not. Or perhaps in some cases it could be worked into the loan as a closing cost concession. So in this example, $450,000 house, let's say there was an X amount of dollars that were going for the buyer's agent's compensation. So at closing, it would be $450,000 plus the appraisal, plus the home inspection, plus the compensation for the buyer's agent. That's how much money would come to the table from the buyer side. The buyer would be refunded the amount they paid for the appraisal and the home inspection, and then any down payment or earnest money deposit, also known as an EMD, that would go back to the buyer, and then the compensation for the buyer's agent would be paid to the broker for the buyer's agent. And then the seller would get all the money that they were expecting. Okay. And then the seller, out of his or her proceed, would compensate the listing agent. Okay, so that's how it works. Now, so that veteran's loan, again, it's a no money down loan, and there's no PMI. So your payment, you're saving anywhere from $150 to several $100s a month, depending on the amount of the loan. Okay. Now, if you are a veteran, you're using the loan, you can put money down to lower your payment. So let's say you're buying that $450,000 house, but you want to lower your monthly payment. What you would do is you would, if you had the money, obviously, you would put a larger down payment. So maybe you're going to put a down payment down of $50,000. So now your mortgage is only going to be about $400,000. So that's going to be a lower monthly payment than if you were financing the full $450,000+. Okay. So that's how the VA loan works. The FHA loan, similar, only it's 3.5% down, and then you do have to pay private mortgage insurance, also referred to as PMI, and that is for the lifetime of the loan. So even when you get to the point where you have 25% equity in the home, you're still paying that PMI unless you refinance. Now, let's put a pin in that for a minute, because home values have been increasing pretty consistently year over year. And so let's say, we'll use that same example. You're buying a $450,000 house, and then you're putting down a deposit of 3.5%, and that would be about $15,000. So your payment would be your balance would be about $435,000, let's call it clean, and then your payment would be based on that. So let's say you get to the point, and then let's say property values increase 5 or 10% per year, and every month you make a payment, you pay extra. You should try and pay a little bit extra on your mortgage payment, because the extra payment goes towards your principal balance. So if your payment is $3,000 a month and you pay $3,300, that extra $300 is taken off the principal balance of the loan. So the interest that you're paying is every month, it's on a lower principal balance. So over the term of the loan, if you were to keep the loan for long term. Instead of it being a 30-year loan, it might only be a 25-year loan or a 22-year loan. Okay, so that would contribute to increasing your equity. Now, so home values go up. Let's keep it simple. They go up 10% per year. Let's say you're making extra payments, so that now you have an extra 5%. So within 2 years, 2.5, 3 years, let's call it, you have 25% equity in your home. You could then refinance and not have to pay PMI. So even if you had the same interest rate, so let's say interest rates don't go down appreciably, and you refinance, but you refinance and you do not have to have a PMI payment, you may save money by refinancing even at the same interest rate. Now, folks, we're talking at a high level here, very not into details, okay? To get into exact numbers, you would have to work with one of my preferred lenders, and they could give you an exact number in your situation. If you have questions on anything like that, all you'd have to do is give me a call, 401-409-5030, and I will refer you to a lender who best suits your situation. If you're looking to buy an investment property, first-time home buyer, multifamily, condo, whatever, depending on what your credit is and how much money you're putting down, we would direct you to the best lender for your situation. So that's where that stands, and with regard to mortgages and mortgage interest rates. So now I want to talk a little bit about trends, okay, market trends, because there have been shifts, and we've talked about these shifts every week for the past several years. And one of the things that is impacting home values, of course, is home sales, okay, and the experts, so people like Lawrence Yun at the National Association of Realtors, are predicting a 9% rise in home sales this year. So this is good because, we haven't had a lot of homes to sell over the past several years. So if the number of sales is increasing, presumably that means there are more homes to be purchased, more homes coming on the market. Most of the homes that have been coming on the market, as we discussed last week, have been from sellers who have to sell for one reason or another. Okay, surprise baby, got to get a bigger house. Okay, getting a divorce. Someone's moving into assisted living or a nursing home. Someone passes away. These are all reasons that people have to sell. Job transfer. Okay, so people have to sell. We're not getting as much as we did 10, 15, 20 years ago, where people were selling their home to buy a home for no significant reason other than they wanted to. Okay, so perhaps with this 9% increase in sales that's being predicted, we will start to see more people who are changing, who want to change homes so they can be closer to work, closer to family, by choice, not by necessity. Okay, so that could be something positive, okay, as sales go up, because the problem we've been having is just more buyers and not enough sellers. So we're getting more sellers, that is help for buyers, okay. Also, mortgage rates have been kind of stabilizing. Last week I think it was 6.88 or 6.89, now we're at 6.81, so we're in that same ballpark. I don't foresee us going down into the 3s, 4s, or 5s. If we hit the 5s, I think it's going to be the high 5s. However, I do not have a crystal ball. If I did, I wouldn't be selling real estate, as much as I love my job. But I think just the data does not support that rates will be going down that significantly. So, stabilizing mortgage rates, that's good, because a lot of times people are like, oh, I'm not going to sell my house until, rates come down, because then I have to buy another house and my mortgage is so good right now. So if mortgage rates start to stabilize, then we really have something that is, stability is good for the economy, and the housing market is the same thing. People don't like uncertainty. Okay. Speaking of uncertainty, it's 6:21 Tuesday evening, and I want to do a quick shout out to our sponsors, Anthony Betancourt, and his team at Compass Title and Escrow do a great job helping our buyers and sellers move towards the closing table, answering any questions that they have right away. And when you get to the closing table, they explain everything to our clients. That is Compass Title and Escrow. Also, G-Mets Moving and Storage, the best move you'll ever make. G-Mets, you can even get a price on what it would cost for your move, whether it's moving furniture from one side of the house to another, moving furniture out of the house so you can have work done, and because they even have storage facilities. So let's say you wanted to have all the floors done in your house. They could come to your house, pack up all your furniture, put it in their storage facility. You could have all your floors done over after whenever it's done. If it's 2 days or 22 days, bring everything back and they'll put it back in your home just like you want. That's G-Mets Moving and Storage. All you have to do is go to their website, gmetsmoving.com. That's G as in George, M as in Michael, E as in Edward, T as in Tom, Z as in Zebra, moving.com. And you can schedule your move or you can get a price on your move. And I always say, every time we talk about this, honesty is the best policy when it comes to estimating how much you have to move. And if you're not sure, get up from your chair behind your computer and go down and actually count the boxes, measure the items that you have, because you don't want to, it's going to take a certain amount of man hours to move your stuff. So whether it's 3 guys working for twice as long as 6 guys, or 6 guys working for half the length of time as 3 guys, it makes sense. And if you can get it done in less time, that's better, because that's the sooner you can get your work done. Move on to your new home or whatever the situation is. So that's G-Mets Moving and Storage. Please check them out. And if you have any questions, you can submit them on their website. And then, of course, the public insurance adjuster, Vern Rainville. Vern Rainville is a public insurance adjuster. He's licensed by the state of Rhode Island. And his phone number is 484-300-8495. That's 484-300-8495. Vern Rainville. He will get back to you within 24 hours. He's a Rhode Island guy. He's right here. And he can answer any questions you have. So if you're not sure if you even have a claim against your insurance company, give him a call. We can ask him questions. Even if it happened a year ago, 18 months ago, run it up the flagpole with Vern, because he has the experience and he is honest and ethical. He'll answer your questions. That's 484-300-8495. Vern Rainville, public insurance adjuster extraordinaire. Okay, getting back to the show, talking about some of the things. We're talking about stabilizing mortgage rates. That's something that will contribute to the potentially increase in home sales. Nationwide, they're forecasting home price growth, also known as equity accumulation, of about 3.7%. I will bet dollars to donuts that here in Rhode Island and southern Massachusetts that number is going to be significantly higher for around here. Significantly higher than that 3.7%. And then, I want to just, luxury trends, luxury homes are a small percentage of the home sales in Rhode Island, and, they're actually forecasting that what's going to be contributing to that is a lot of high-tech home features, energy-efficient designs, and personalized architecture. These are the things that are in high demand amongst luxury home trends, especially with new construction. So if you were to go, and you can actually look at these. You don't have to go in person, because you probably won't be able to. A lot of times you need to have a pre-approval letter before you can get into a luxury home viewing. But you can go and look at the videos online of some of these homes, and it really is impressive how technology can really enhance the value of a home, the safety of a home, the security of a home. It's truly amazing. And again, we don't have a lot of these luxury homes in all parts of Rhode Island. Certainly there are pockets of Rhode Island where you have these luxury homes. but it's a small percentage of the overall sales of homes in Rhode Island. Okay? Because luxury homes, too, it's not just a matter of price, okay? Because you can have pricey homes that are pricey because it's an antique home, so it's not going to be necessarily a luxury home, but it's an old Victorian that has a lot of other types of value. And something else that I just want to touch upon because not many people are aware of it, but it's something called blockchain and tokenization. Okay, Deloitte, which is one of the largest accountancy firms in the world, predicts that over $4 trillion worth of real estate could be tokenized on blockchain networks by 2035. Okay, so this is 10 years away, but this is something that's starting to change now. And this also, another kind of a offshoot of this is cryptocurrency, because there is a growing percentage of real estate transactions that are financed by cryptocurrency, okay, like the Bitcoins of the world. Okay, and I thought I heard today someone was saying Bitcoin was up around over $90,000 again per coin. Isn't that something? Quick aside, and I'm still not all that comfortable from a knowledge basis about cryptocurrency and Bitcoin. And because I was like, jeepers, what is it? I didn't understand it. And then someone pointed out to me, it's like, well, why is the dollar worth anything? It's a piece of legal tender that means we owe the Fed money. It's only worth $1 because we believe it's worth $1. There's nothing behind it. Which is true. It's not backed by gold anymore. So the dollar is worth $1 because we have confidence that it's worth $1. And I think that's what's happening with Bitcoin. Okay, and there are other cryptocurrencies as well that maybe have a different type of stability, but they still have a lot of value. And again, and I don't have the statistics, but a growing percentage of real estate transactions are being financed by cryptocurrency. So that's something else to think about. We'll put a pin in that and see where that goes over the next 12 months or so. I wanted to spend a little bit of time today talking about investors. I don't talk a lot about investment real estate because not a lot of folks are interested in it or participate in it. There are more folks who participate in, home purchases that they can live in, a home for a resident or a vacation home. But we'll come back to those a little bit later in the show. And I wanted to talk, just to kind of give you some pointers. If you're thinking about becoming an investor, capitalizing on those trends that I referenced earlier, there are some strategies that you need to incorporate and consider. Okay, some approaches that you may want to consider are diversifying across asset classes. Now, you may want to consider this, and I'll talk about that because this is generally accepted advice. However, if you are just beginning, I do not think you should even talk about asset classes. Okay, if you are just beginning, you should be looking at residential real estate, and whether it's a single-family home, a multi-family home, or a condominium, they are three distinct business models for an investor. What do you mean by that, Joe? Well, if you're buying a condominium to rent it out, that's actually the least management intensive out of the three, because the condo association takes care of all the maintenance for you. All you have to do is deal with finding a good tenant who pays your rent every month, doesn't disturb the neighbors, and lives peaceably. And then you collect your check every month. Okay? That's the easiest way renting a condominium. The downside is you only have one unit. So that tenant moves out. It's very unusual for a landlord to find a tenant to move in the day after a tenant moves out. Usually the property is vacant for 30 days or so. So that's lost rent. That's lost revenue. So you would have to be able to cover the expenses for that property for that month of vacancy. Now, the longer it's vacant, the longer you have to be able to cover those monthly expenses, and the condo fees. Condo fees are $3 to $4 plus $100 a month. Okay. Now, what's important when you're looking at condominiums is, what does that condo fee cover? Some condominium developments have a condo fee that includes water and sewer. Many do not. Okay, when I owned a condo, I had to pay my own water and my own sewer in addition to the condo fee. If you have a condo association where there's a swimming pool, or there are a lot of other amenities, tennis courts, things like that, that condo fee would have to support those amenities. And some of the things, like if you have a swimming pool, not only is maintenance a significant draw, but also the insurance on that swimming pool. And if you're not someone that is going to use that swimming pool on a regular basis, you need to think hard and long if you want to buy a condominium in that development where your condo fee is going to go, a portion of your condo fee is going to go towards an amenity that you're not going to use. Okay, but so condominiums, they are the easiest in that sense. Okay, because they're the least management intensive. Next up would be a single-family home. Okay. Now, a single-family home, again, what's good about condominiums and single-family home tenants is they tend to remain your tenant for a longer period of time. The turnover rate is much lower for condo tenants and single-family home tenants because usually they're a little bit more stable. A lot of times if you have multifamily properties, you might be renting to younger people who get married, who, start making more money, want to buy a home, so they're there for 1 year, 2 years, but typically you're not going to have a tenant that's going to be there. It's more likely you'll have higher turnover than low turnover, and single-family homes definitely have the lowest turnover from a rental perspective. Now, of course, when you own a single-family home, there's maintenance, okay? The lawn needs to be mowed, snow removal, garbage has to be taken out. And depending upon how much you're charging, what the rent is, how strong your lease is, you can require the tenant to do that. So if you're renting to an 80-year-old single woman, you're probably not going to want her, or you'd be unwise to expect her to do all of that. Okay, sometimes it's just better to take it on yourself. So you'd obviously charge a little bit more if you're, as landlord, you're handling all of that yourself. Okay, but that's more management intensive than the condominium. Also, like the condominium, when the tenant does move out, you don't have any other income coming in. Okay, so you are in a huge negative cash flow situation, whether it's for 30 days, 60 days, 90 days, etc. Okay, and then the third option is a multifamily home. Now, if you're starting off with a 2-family home or a 3-family home, the big benefit is one tenant moves out, you have other rental incomes coming in. So a lot of times what folks will do is they'll live in one unit and then rent out the other two, and the other two cover the mortgage, so you essentially live rent-free, which means you should be paying that amount in rent to your savings account to save up money so you can buy another house. The downside to multifamily residential homes is heating systems. You have, if you're a 3-family home that has 3 separate heating systems, those all need to be maintained. Okay, and that's obviously 3 times the cost than if you have a single heating system in a single-family home. Now there are many multifamily homes that have one heating system for the whole home. Now in that case, that means typically the landlord has to pay for the heat, okay, if it's oil or if it's gas, and then you have to trust that your tenants aren't keeping the thermostat set at 80 in January and then opening the windows to cool the house off. Okay, and again, there are ways to mitigate the chances of this happening, and to kind of recoup some of the money, or you can put sub-meters in. There are ways around it, but if you buy a home that has one heating system for 3 units or 4 units, I looked at one this weekend right here in the city. There were 4 units. You as a landlord, that could be a significant expense every month. Okay, paying the gas or oil to heat 4 units. Now, if the boiler poops the bed, now you have nobody that has heat, and then you only have to replace one. But usually it's advisable to have separate heating units for each unit. So if you can afford to make that upgrade, it's not necessarily something that's going to add value to the property. So if you spend $30,000 on 3 new boilers for a 3-family property, it's not necessarily going to increase the fair market value of that property by $30,000. It may make your life a little more, a little easier, but that's something that isn't going to give you a direct bang for the buck that you're spending. Okay. Also, with a multifamily home, you have 3 kitchens and you have 3 bathrooms. So those are 3, systems, like the kitchen system. So you've got your stove, your refrigerator, you've got the kitchen sink and that plumbing, and then in the bathroom you have the sink, you have the shower, bathtub, and you have the toilet. Those are things that can create problems or have problems. So there are other potential management challenges that could pop up. Okay, things that could create problems. Okay, you've got to, and I'll tell you this from personal experience, running toilets. I had a tenant that never told me they had a running toilet, and then I received a water bill for $900 one month. Okay, yeah, that's not fun. So if you are going to have a 3-family house or even a 1-family house, if you're going to own investment properties, you need to go there. You need to walk around the property, talk to your tenants. You need to manage the property, manage the tenants, develop relationships. If your tenants like you and think you care about them, they're going to care about your property as well. You don't want to have a tenant that has the attitude that that landlord's an SOB, and then they see that the downspout blew off and the water is just dripping down, and they don't call the landlord and say, hey, the downspouts off. Well, that's one of those things that a repair for less than $20 could save you a lot of money down the road when that water starts penetrating into the basement through the foundation. Okay, so ideally you want to not necessarily make friends, but the old saying, sugar sweeter than salt, and you want to have a good relationship with your tenants, and the best way to do that is to show them that you care and provide good housing for them, safe housing for them. Okay, folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM, 1380 on the AM dial, and we are also on WNRI.com. We stream free of charge. You can check us out there. This show is here every Tuesday evening from 6 to 7 o'clock p.m., and we also rebroadcast it on Saturdays at 1 p.m. Quick shout out to our sponsors, Compass Title and Escrow, G-Mets Moving and Storage, the best move you'll ever make. Check them out at gmetsmoving.com. And of course, Vern Rainville, Public Insurance Adjuster, licensed by the state of Rhode Island, 484-300-8495, 484-300-8495. Vern will return your call within 24 hours. He's a Rhode Island guy. Even though his phone number doesn't seem like a Rhode Island number, it's a Rhode Island number, 484-300-8495. Vern Rainville, Public Insurance Adjuster. So folks, when you are getting into the investment game, those are the things you want to determine up front. Okay, what is your appetite, your capacity for management? All right, you need to think about things like, are you a single individual, or do you have a spouse and little kids? Do you travel a lot for work? Do you work long hours? Okay, these are things that need to be factored in to which business model you choose or how you structure your business model. You could always just buy the property and pay a management company to handle everything. Now that's going to come off the top, so that's less money in your pocket, but you will reap the benefits of equity accumulation every year. Okay. A way to get into the real estate investment market, sometimes look into second tier markets. Okay, you don't have to go and buy the biggest, fanciest homes on the east side of Providence, or in the most exclusive neighborhoods. Look into some other areas, and the most important thing you want to get is you want to get a solid structure. Okay, it's important to have a home inspection to determine the structural integrity of the home. Okay, your realtor can help you to an extent, but we know about real estate, not about structure or construction. So that's where you have to really rely heavily on the home inspector. And if he or she points things out that make you uncomfortable, you need to do further inspection, talk to your realtor about that. Okay, if you have questions for me on this, 401-409-5030, and I will answer your questions for you. But that's something you want to look at. And then I cannot stress enough, when you are renting, deciding who you want to be your tenant, be fussy, because the only thing worse than having an empty apartment is having a tenant living in that apartment that you don't want in there. The laws are not friendly towards landlords, let's put it that way. So that's if you're looking to buy a property and hold on to it. Okay, that's called a buy and hold. You more to experience long-term gains. Okay, and generate long-term income potential. You can also do what are called fix and flips, okay, where you're buying a home that, straight out of 1972, hasn't been updated, has old appliances, old windows, or maybe the roof needs to be replaced, has no curb appeal. You want to go in there, buy the house, clean it up, give it a lot of curb appeal, improve the home, okay, improve the systems, electrical, plumbing, make it much more attractive, update the kitchen, update the bathroom fixtures. If it needs a new roof, put a new roof on, replace the windows if those needs to be replaced, and then take care of the landscaping so it looks pretty from the street. When you do that, then you can turn around and sell that home again to someone. There are lots of buyers today who they just want to move into a house, drop their luggage, unpack, and start living. They don't want to have to paint walls, replace carpets, or things like that. So there is a market for these people who flip homes. Now the challenge, of course, is finding a home that's worth flipping. And this is, again, where you would want to have a relationship with an experienced full-time realtor who can provide you with guidance if you want it and need it on what's going on. I mean, the benefit to being a full-time realtor, I've been in the business almost 20 years, is that my market knowledge spans since 2006. So I've seen a couple of different business cycles, and I can share that with my clients to help them extract value from their purchase, okay, or their sale, okay. But fix and flip, there are things when you're looking to do a fix and flip, or even a buy and hold, you want to pay attention to things like parking. Okay, you want to make sure there's adequate parking for your tenants. Try not to buy a home that is a house of one-bedroom units, because then you are limited to who your potential tenants could be, okay, when you're trying to rent it out. So I try to encourage everybody to get at least 2 bedrooms per unit, if possible 3 bedrooms, or look for opportunities where you can add value, where you can add units. If there's an attic that can be finished and made into livable space, if there's a basement that can be converted into livable space. These are things that I think would be, I know are great ways to add value. Because, what you can do is, I advise my clients, you buy the house, if it needs curb appeal, if it's not attractive, do the things that will make it pop first, so it will look a lot better. It doesn't cost a lot of money to do these things, and then the value goes up, and then you can refinance, take money out, and then do the big ticket items. If you're finishing that basement, to add, make the first floor a townhouse unit, or finishing the attic to make the third floor a townhouse unit. That can be bigger dollar amounts. And so if you can refinance the house, take money out so you can get that work done, and now instead of having a 3-bedroom unit on the 4th floor, you have a 5-bedroom unit, or maybe you can add another unit, you can really increase your cash flow. Okay. So, a lot of this you need to clarify what are your investment goals, and that will help you determine, what you should do. I always advise people, do not speculate when it comes to real estate. Use good, sound investment principles when deciding to buy a property or not to buy a property. So I try to discourage people from looking to get a quick turn just because the market is increasing in value. You need to do something to add value to the property. So if you can do that, turn around and get it done in 90 days and flip it, great. You can get short-term profits that way. If you're looking to do something more with passive income, buy and hold, set it up. Maybe you want to get a management company in there. And again, we've got some great management companies here. Nexus Property Management right here in Woonsocket does an unbelievable job. Then it's just kind of like set it and forget it. They take care of everything for you. Collecting the rent, dealing with the repairs, dealing with re-tenanting the property when someone moves out, etc. Okay. And then you can look at portfolio growth. So let's say, you start out, you've got your 3-family property, you fix it up, you add value, it's performing, and now you're like, you know what, I want to move up to a 4-unit or a 5-unit or a 6-unit property. You can either take money out of the property that you started with, okay, refinance it, take money out, put that down on a larger property, or you can do, as long as you don't live in the property, what's called a 1031 exchange, a like-kind exchange. So you sell that 3-unit property, let's say you clear $150,000, that capital gain is deferred. So you're not paying capital gains on that $150,000 today. It's pushed on to the next property that you're buying because you're buying another rental property. You're just buying a bigger one or a better one or a more expensive one. Okay, and this is how you can start to create a portfolio of properties or of units or properties and set yourself up for long-term wealth development. Okay, the key thing is here, this all sounds great and it's wonderful. Landlording is not easy. Okay, even when you have a property management company, there are always challenges. Things happen. And you need to be able to psychologically, you need to have the intestinal fortitude to deal with challenges, because even if you have a property management company and then on December 23rd somebody's boiler dies, that's still your problem. Okay, these things do happen. Okay, you get flooded out. I mean, the big rainstorms we've had over the past 10 years or 15 years, there are a lot of people who had water in the basement that never had water previously. And guess what happens when your boilers are underwater? You've got to buy new boilers. And these are things that are not always covered by insurance, but that's why you should, if you have an experience like that, you want to have a relationship with an awesome public insurance adjuster like Vern Rainville, because he can help you out and give you guidance. 484-300-8495. Again, Vern Rainville, public insurance adjuster, licensed by Rhode Island. 484-300-8495. Because he could tell you what is covered and what's not covered. And if you do have an emergency like that, it's important to have relationships with vendors. Okay, we've had Superior Comfort on this show a couple of times previously, and they have some great programs where you can lease your HVAC system from them. So if you're in a spot, they've got people. They'll get out there like ASAP, and you just complete all the paperwork, and then you can lease everything from them for whatever it is, 10 years. Or you can buy it outright and finance it with them. Okay? But not all heating and cooling companies have that flexibility. So, again, you need to develop relationships with people. So, as you're growing your portfolio of properties, as you're getting more experience being a landlord, being a property owner, an owner of multiple properties or multiple units, you develop these relationships along the way so that when things pop up, and again, I always say surprises in real estate are never good. There's never that surprise where you open that bureau in the basement and you find $1 million in cash. I don't know that would necessarily be good, but It's surprises are bad. Okay, I've never had a good surprise when it comes to real estate. So, then you also just want to pay attention to market conditions. Okay, and people say, when is the best time to plant a tree 10 years ago? When is the next best time to plant a tree today? Same thing with buying a home, to buy real estate, because people make good real estate decisions when the economy is moving up, or the housing market's moving up, the housing market's moving down, with high interest rates, low interest rates, in between interest rates. There are always opportunities to make good real estate decisions, but you have to not make rash real estate decisions. You have to use fundamental analysis to determine if this is a good move for you or not. And you have to be willing to walk away from a property. If the numbers don't work, if you can't get what you need by purchasing that property, walk away. There are lots of properties out there. Okay, never fall in love with something that can't love you back. Okay, and a house certainly falls into that, bucket. What you can do too is there are opportunities to leverage technology as a landlord. How your tenants pay rent, how they, the different types of security systems that you have. There is just tremendous opportunities to utilize technology, and even now AI is coming in regarding security on homes. So you don't have, or you shouldn't have to have the situation where a tenant locks themselves out and you have to go drive to the house with your set of keys to let them in. Okay, those are the old days. You don't need to do that anymore, because I have clients that they can unlock the door from their phone. Okay, so someone locks himself out on a Saturday afternoon, Sunday night, whenever it is. They send a message to the landlord or the property manager, and the door can be unlocked from a cell phone. Okay. And again, I would just, we're coming to the end of the show. I just want to wrap up by talking about, the financing portion. If you can use financing to your benefit, something that a lot of folks don't realize, because you have the people out there, financial gurus, who say having a mortgage is not good. You don't want to have a mortgage. Pay a mortgage down. There are certain accountants who will say, no, having a house with a mortgage, it's an expense, it's not an asset, and I don't want to get into those discussions. I'm not an accountant, I'm not a financial guru, but I do know if you have investment property and you refinance that investment property, so let's say you bought it at $450,000, you own it for a few years, you add value, and now it's worth $600,000. And you refinance it, and you take 80% of that. So, what's 80% of 600,000? $480,000. If you refinance that, and let's say your first mortgage was, you bought it at $450, you paid it down to $425. So the difference between that $480 and that $425, okay, what's that? $55,000. That's money that you can receive. It's tax-free because it's actually debt. It's not income. That cash came from the proceeds from that mortgage. So what you should do is not buy a car or pay for a vacation or pay for a wedding with that. You should take that money and invest it in something else, either another piece of real estate or stocks or something like that, something that will increase in value. Or like maybe even you'd want to consider cryptocurrency like Bitcoin. I don't know, but I would just say that's, those are the things you want to do, and that's a way that you can extract money from a home. Now, it only makes sense to do that if the property can perform at a level, can cash flow at a level that will more than easily cover the monthly debt service payment. Okay, and ideally you want it to cover the debt service payment, all of your taxes, all of your insurances, all of your management fees, and then have a 5% vacancy factor, and then have other monies that are put aside to amortize debt service. So if something happens, tenant moves out, you've got 2 tenants out, you're in negative cash flow, you have a cushion to fall back on. You never want to over-leverage property that cannot sustain or support the debt. Because if the market turns, if something happens, you won't be able to do anything with it. Okay? So there's a double-edged sword to when you're refinancing and taking all that cash out. That's why you shouldn't put it into something like a car or a depreciable asset like that. Put it into something else that's going to generate money, or even if you just take it and put it in a mutual fund so that if something does happen, it's liquid. Okay? You know, there are even ways, folks, where you can have self-directed IRAs where you can put these properties in your IRA, and the positive cash flow that they generate goes into your IRA. If you want to learn more about that, give me a call, 401-409-5030. Folks, you've been listening to the Joe Luca Real Estate Show right here on WNRI. I'm here every Tuesday evening from 6 to 7 o'clock p.m. And I appreciate you tuning in. Next up, we have Rick Mernier with the Old Time Preaching Chapel, Preaching Ministry. Rick is going to go over some good scripture readings with you, give you a good interpretation of the Bible. So I strongly encourage you to stay tuned in for that. This show will be rebroadcast Saturday at 1 o'clock, so you could listen to it again at that time. Otherwise, we'll be back next week, same bat time, same bat channel. We have guests next week. I'm drawing a total blank on who we have, but please pencil it in your calendar. And if you want to learn more about me, you can Google me, Joe Luca, Luca, Realtor. You can look for me on YouTube, Google, Google me for my My Business page, or just my web page as well. But I look forward to coming back next week. If you have any questions on anything, again, give me a call, 401-409-5030. You can text me at that number or voice call, 401-409-5030. I'd be more than happy to answer any questions that you have. Also, I just want to announce quickly, I have some buyers that are looking for homes in Cumberland. And I have a couple of listings, a mixed-use property in North Providence, a commercial property right here in Blackstone. So if you know anyone who's looking to or sell their home in the next 6, 12, 18 months, please give me a call, 401-409-5030. I would greatly appreciate it. Again, Joe Luca signing off, and we will be back next week, same bat time, same bat channel. Bye-bye. Hey guys, thank you very much for tuning in. Bye-bye.